What's up everybody? Welcome to the Stocks channel. My name is Cory and tonight's episode will be your daily stock market technical analysis update. We saw the stock market continue to go higher across the board today, and now we have to ask ourselves, did we go too far too fast, and was today potentially a bull trap? Before we get into the charts, please help me out by smashing that like button and subscribe to the channel if you want to follow along with all of my daily updates. First up, we'll take a look at the S&P 500 Spy Etf. So let's crack open this chart and see what's going on in the stock market today. Alright, so today we see the Spy ETF closing up 1.95%, continuing that extreme bullish price action that we've been seeing. From just 4 short days ago, we've come up all the way to today's close of over 7% in just 4 days time. So that's extreme bullish price action, and we could see that that also helped reverse the trend from bearish to bullish. That 5 EMA is now trading over the 13 and the 50, and the price action now has 2 days in a row of closing above that 20 simple moving average. But we have to ask ourselves, did we get here too fast, and can the stock market maintain this price action movement, or are we going to start retracing from these highs? So remember back here on September 2nd when we started closing above our resistance trend line that go all the way back to 2009, and we did get this breakout above just to be followed by an extreme bearish price action flush the next day. So this isn't exactly the same because we're not up in that resistance trend line yet, but we do have these lower highs forming, and we were in this sort of consolidation wedge forming, and now we're starting to break out of the top of this consolidation wedge. So anytime we have a breakout of price action like this, we always have to leave the option on the table that it could be a false breakout trying to trap some bulls into a long position just before the market's ready to sell off. So by no means are we saying that this is definitely a bull trap, but it is something to consider because today was a very bullish day and it could have trapped a lot of long bulls and it could have switched a lot of bears to bulls. So remember, there's a lot of bears down here that got absolutely destroyed by this monster run up. And now that we've had this monster run up, there's a lot of bears that were shorting down here that are now buying calls and trying to go long up here. So they continually go to the wrong side of the trade, and they're just rookie investors that don't know any better. So at this point, we have to consider the possibility that all of the bears either got short squeezed or they flipped over and FOMO'd in at the top, and now they're bulls, just at the wrong time, right before the market's ready to drop. So remember, as we were gapping up here, we did leave gaps open at 338, and we did open a new gap today at 348. So gaps typically get filled, and there's no guarantee we have to go fill those gaps anytime soon, but we know they will typically get filled. So we have these gaps that we have to recognize to the downside with a potential bull trap today breaking out of this resistance trend line. We also failed to form a higher high, and it's not too late to do that. We could still do that by tomorrow, but we have to consider this option that we could start retracing. So from this low to the high, I have some Fibonacci retracements here, and if we retrace 0.236 or 0.382, we will close this first gap. It'll take a retracement of 0.5 at 337 to come all the way down here and close the gap at 338. So right now the price action is looking very bullish, and it is looking a little extended, but that doesn't mean we can't keep going up from here. So I don't want everybody to get too bearish on this idea, but it is possible that we're reaching a critical top. And if we do come out here and close back above 352, we're getting back into our critical resistance trend lines at 354 and all the way up here at 356. So we're getting extreme bullish price action, and the trend is now also reversing from bear to bullish. So we are becoming more bullish on this market, and we are considering the opportunity to buy in and add to our positions on dips. So possible dips to look for right now are the gap close at 348, the 0.236 Fibonacci retracement at 345, and then of course we'll have the 20 simple moving average, which is right around that 0.382 Fibonacci retracement at 341. Those should be some good opportunities to look for potential dips. But remember, we don't want to make any assumptions. If we do start heading down, it could be a falling knife scenario, and we really want to wait for a bounce off of one of these levels before we start buying in. So we could come down to any of these levels before we finally see a bounce. So just like on the way up, we don't want to try to call a top. If we do start getting into a situation where we head lower, we don't want to just assume we know where the bottom's going to be, and we want to wait for that confirmation bounce. It's still very likely, if we go back to our consolidation wedge, that we're sort of ping-ponging in between support and resistance levels, and we could have had that little bull trap just breaking out above resistance, but just a false breakout, and we could come all the way back down to our support level before resuming up. Now if we do come back down and we do come out here and break again, this is the bullish support level we're looking to buy on if we get the opportunity. Like I said, there's no guarantee we have to go back and test this level again, but if we do, this would be a great buying opportunity somewhere about a SPY level of $330. Now, if this is not a false breakout, what we're looking for a break of this resistance trend line is another test of this trend line as support and then one more bounce, and this could be a bullish setup to continue to head higher. But right now, this is just a breakout, and until we get a confirmation bounce of that breakout as support, it's not a bullish indication just yet. Remember, the stock market is designed to trick a lot of the investors so that they lose money, and right now, this is the perfect trick. There's a lot of FOMO in a market like this, and there's a lot of people that feel like they're going to miss out if they don't jump in at the top because they feel like the market is just going to keep going higher and they're going to be left on the sidelines. As I always say right here on the Stocks channel, you know that that is not the case, and there's always going to be a buying opportunity right around the corner as long as you're willing to be patient and wait for the right setup. So right now, this is absolutely not the right time to be buying into the stock market, and we're reaching critical resistance levels that we need to be patient and see if we're going to get sharp corrections from these resistance levels. So remember, long term, we're still bullish, and we're bullish in the short term now because the trend is telling us to be. So I'm not saying that this bull trap is going to lead to a bear market, but it could lead to a significant pullback, which we're looking as a good opportunity to buy into this market for the long term. So next up, let's take a look at the Nasdaq 100 QQQ ETF. And we also see that that extreme price action is carrying over to the Nasdaq, and we had another monster gap up on the price today. So we have a new gap that opened at 289, and we gapped all the way above there to 292. So that gap will close at a 0.236 Fibonacci retracement right around that $289 level. But don't forget, we still have gaps that take us all the way down to 276, and that's going somewhere beyond a 0.618 Fibonacci retracement. So you can see on the Nasdaq 100, we did break out of this resistance trend line, which could also be that bull trap that we were talking about on the S&P 500. We did fail to close above the previous high right around 294, so we can see that we're reaching this resistance level, and we are getting into an area where we could see a pullback. So it's completely realistic that we can see prices start retracing from this level, but you can see that we have bullish price action and bullish trending going on. So we're not bearish on this market, we're just looking for a pullback because of the extended price action and how fast we move such a significant amount. So we're looking for opportunities to buy off these support levels, and like I said on the S&P 500, we want to wait to come down to a support level and get a bounce, some confirmation that that level is support, and we're seeing buyers coming in at these levels before we get too bullish. But overall, the price action and the trend are bullish on the S&P 500 and the Nasdaq 100, so we're still going to remain bullish on this market even though we are expecting a pullback. So price levels on the downside to watch as potential support for the Nasdaq 100 are $289, $284, and then the 0.5 will be the $281 mark. If we start breaking below 281, it's very likely we're just going to go all the way down to $276 and close the gap. Now don't forget, we also have our support trend line, so if we do come all the way down to the support trend line, we're looking at a price level of somewhere around 274 before we could find support down here and then start heading higher. So there's a lot of support levels to keep an eye on, and I know it's a lot to look for, but you have to have these levels on your chart because you don't know exactly where we're going to find support, and you want to have these levels in your mind so that if we do start seeing a bounce, you can know that we possibly could see a good buying opportunity. Next up is the Dow Jones Dia Etf, and we see the Dow Jones also looking bullish, going up 1.94% today. We're closing back above the 20 simple moving average, which is bullish price action, and we can see that that bear trend has now snapped and we're heading into a bullish trend. The 5 EMA crossed above the 50 and the 13 today, and it looks like it's still heading up higher and could cross above the 20 simple moving average next. So we do have gaps open on the DIA ETF down at 269 and then another gap down at 265. So if we do start pulling back from these levels, watch for the potential that those gaps could close, and when those gaps close, those could be great buying opportunities to go long on this market now that we're in a bullish trend. Next up is the VIX, which is our fear indicator, and we see the VIX continuing to decline today, going down over -6%. So that's exactly what we expect to see when the market's going higher. We're going to see fear continue to leave this market, and we're going to see the VIX head lower. So you can see that the VIX is now heading into a short-term bear trend because that 5 EMA is starting to cross below the 13, and the price action is bearish as well because we're closing below all the moving averages. So fear is definitely leaving this market, and uncertainty is going away. And when fear is not in the market, we could see the market start heading higher, grinding higher day by day, because there won't be a lot of fear, there shouldn't be a lot of selling. And when we get into a bullish market and a bullish trend, there's going to be a lot of people stepping in, cash off the sidelines, going to start buying in on the dips, and we're going to start going back into that bull market that we were talking about in Sunday's video. But remember, there's no reason to FOMO in, and if you're not already in this market, just wait for the next buying opportunity. There's always going to be an opportunity to buy into the market. There's no reason to FOMO in. And for all of you wondering what FOMO is a fear of missing out, and the definition of FOMO in the stock market is that you're chasing a stock just because it's going higher. If you didn't already buy low, just be patient and wait for the next dip for an opportunity to start adding into a position. Next up is Apple stock, which is our market moving stock, and we see Apple did close and break above its resistance trend line today. Apple did close above the 20 simple moving average, and the short-term bear trend has now snapped, and we're heading into a short-term bull trend. So Apple's looking good, but it did open two gaps along the way that we're going to keep an eye on, and those gaps will close at $116 and $111. So you can see the potential for bull traps all around the market, with a lot of these stocks looking like they're breaking out of their resistance levels, and it could be the real deal breakout. We're not saying it's not, but we would like to see a test potentially on the top of this gap, or even come down here and close this gap and then continue higher, and that will be our confirmation that resistance is now support and the bulls are in full control. So right now we're cautiously bullish because we were getting bullish down here and we were buying into the stock market, and now that the market is starting to rally very aggressively to the upside, we want to start getting a little more cautious and a little more hesitant to buy in until we start seeing some of these dips. Nothing can go up forever, and nothing's going to just go up in a straight line without any pullbacks. So again, there's no reason to FOMO into any of these stocks. Next up is Tesla stock, and we see Tesla looking really good today, closing back above the 20 simple moving average, and we see that the bear trend snapped and we're going back into a bull trend. So Tesla's looking good, and our first price target will be our previous high right around $461. If the Tesla bulls break 461, they're likely going back to the previous all-time high at $503. So Tesla's looking good, and as you can see on Tesla, we have no gaps below, so the price action looks a lot more stable and a lot healthier, and we don't see those giant gap ups that we're seeing across the market. Next up is the US dollar, and we're looking at DXY, and we see the US dollar still looking bearish, with that bearish price action going all the way close to the lower Bollinger Band. So we'll see if the dollar will hold up at support at 92.3, but it's not looking good for the dollar, and as you know, we say here on the stocks channel that a weak dollar is bullish for stocks. So stocks going up while the dollar's going down is no surprise because of that inverse relationship between the stock market and the dollar. Next up is gold, and as we know, gold is a hedge to the dollar, so a weak dollar is strong gold. And we see that today with gold's bullish price action closing up over 2.4% and breaking out of both resistance levels. So gold's looking good, and right now we want to see if gold can come back and test resistance as support and bounce off of that 1930 level and start heading higher. But it looks great for gold, and we can see bullish price action and bullish trending developing on gold. So if we could get one more test of 1930 and a bounce from there, it's off to the races for the bulls. Quick update on silver, same thing, we broke out above resistance, and if we can get a test right around that $25.24 level and bounce, it could be very good news for the metals. Next up is Bitcoin, and Bitcoin's still looking extremely bullish after it broke through our resistance level, which was our price target at 13,800, and we could see a lot of volume going into Bitcoin as it continues to head higher. So bullish price action on high volume is going to be extreme bullishness on Bitcoin, and that's right in line with getting to our next price target at $17,000. So it looks like we have plenty of bulls buying in and bullish price action with all kinds of bullish trending. So Bitcoin is still looking really good, and we're still expecting Bitcoin to get to our price target of $17,000 soon. Next up is financial sector, and we see bullish price action on the financials with bullish trending. So financials are looking good, and we're waiting to see if it could come out and form a new higher high. If financials form a new higher high, that's going to be very bullish for the S&P 500. Next up is the industrial sector, and we see the industrials with bullish price action and bullish trending also waiting to come out here and try to form a higher high. So our previous resistance level on industrials is down here around $81.69, and if we can get a daily higher high on this chart, that's going to be great news for the S&P 500. Next up is healthcare, and we see bullish price action and bullish trending as well, and we did break out to a new daily higher high. It looks like we broke out of resistance and we tested as support today, and we're still closing higher. So overall, all the sectors are looking bullish, which is great news for the S&P 500. So to pull this all together and summarize, going back to the S&P 500, we can see that we have bullish price action and bullish trending all around the stock market and in all of the sectors. Now the question is, did we go too far too fast, and are we due for a healthy correction and a healthy pullback before we continue higher? Only time will tell, but right now we're being a little more defensive after we had such a bullish rally, and we did take this opportunity to take some profits off the table and get ready for the next buying opportunity. Remember, if you want to be a part of the Stocks Channel Discord, there's a link in the description, and in the Discord we're getting into a lot more detail about entries and exits and possible trades to make in this market. Right now, volatility is high, so it's a great time to be a member of the Discord channel. So remember to be patient in this market and try not to FOMO into moves like this. Wait for the next buying opportunity. Also, please remember to help me out by smashing that like button. And if you're new to the channel, go ahead and smash that subscribe button so you can follow along with all of my daily updates. Thanks for watching, everybody. Good luck out there. And as always, I will see you in the next episode.